Welcome everyone in a new video. In this video we will talk about how you can trade every day. Like we will show you the exact steps that you can use to take the entries in the gold if you are a day trader. And first of all, we can start from any point, and for the day separate you have to double click on the candles and then go to the events and mark the session breaks. Now all this is the 1 day price action, and you are seeing this 1 day price action in the 15-minute time frame. Now how you can take entry every day? Now first of all, as you can see that market is moving to the upside and when market shift to the downside, which is at this point, when market closed below this point, this is the change of character. Now when you can sell, when market take out the inducement or sweep the previous pullbacks liquidity, which is at this point. Now after that you can see that market move to the downside again. This is the end of the day, and the next day start from this point. Market move to the upside. Now when you can trade, whenever market take out the liquidity of any previous pullback high or low, you can look for the entry again. Now market move to the upside, came back downside to for the liquidity sweep, and at this point it swept the liquidity of the previous pullback, which was at this point. Now you can again look for an entry to the upside. Market move to the upside at this point. Now again next day opens at this point and market drops sharply to the downside. Now how you can trade? Now you can look for the sell entries when market took out the inducement or sweep the liquidity. Now this is the liquidity sweep point. Market swept the liquidity at this point. You can look for a sell, but at the same time you can also have the probability of market moving to the upside. So you can buy when market take out the liquidity of these equal lows at this point. Now you can see that market move to the upside after taking out the liquidity at this point, and also move to the downside after taking out the liquidity to the downside. Now at this point market again open the new day, and now on this day how you can take the trade? First of all, you have to observe the price action. Market again continue made the same pattern, and at this point it swept the liquidity of the previous pullback. Now you can again look for a buy at this point, and market moved to the upside and gave you the this move at this point. Now you may have also looked at the sell side, because this is the previous high. Market closed the candle below this point, so this is not the strong sell signal. So this is not the proper sell signal. And on the next day market again moved to the upside, and where it moves to the this imbalance at this point. Now if market gives you another confirmation like sweep the previous high liquidity, then you can again look for a sell. Now if we move to the right side, as you can see that this was the equal highs. Market swept the liquidity of this point at this point, and you can look for a sell. And if you have missed the opportunity, you can again wait for the market to sweep the previous pullbacks liquidity, which is again at this point, and market move to the downside. And on the next day again, as you can see that the trend is the downside, but market haven't swept the liquidity of the previous pullback, which is at this point. When market sweep the liquidity of this pullback, you can look for the sell, and on the counter trend you can look for the buy when market sweep the liquidity of these lows on a unmitigated order block or a imbalance. And this was the unmitigated order block. Market tap on it, move to the upside, sweep the liquidity of this pullback, and then again move to the downside. In this way, for the extra confirmation, you can see that this is the first pullback. Market again take out the liquidity of this point and move to the downside. And again if you miss the opportunity, this is the next pullback. Market took out the liquidity of this point and dropped hard to the downside. Again, now our trend is bearish. We again wait for the market to take out the liquidity on the next day also. This was the liquidity build up at this point. Market took out the liquidity and it tap on the unmitigated order block. Now where is the unmitigated order block? This point is the unmitigated order block at this point, and again it dropped to the downside. This is again your trade. Now at the same time you can also look for the counter trend trade, and this was the unmitigated order block. Market tap on this point and you can look for the move, but as you also have to keep in mind that you are in a bearish trend. Now again when a market took out this trend line liquidity at this point and tap on the unmitigated imbalance, which was at this point, this was the imbalance, market again dropped to the downside on this day. Now again as you can see that on the next day market opens, moves to the downside. Now when you can buy when market took out the liquidity of the sell side, and you can sell when market took out the liquidity of buy side. This was the buy side. When market took out this liquidity, you can look for a sell. And where is the sell side liquidity? This is the sell side liquidity. When market took out this liquidity, you can look for a buy. And as you can see that market took this liquidity, moved to the upside, and it served the liquidity of also this high and moved to the downside. And again, this was the liquidity sweep of the buy side at this point, and market moved to the downside. And again, it took out the liquidity of the sell side at this point, and also tap on this unmitigate order block, which is at this point, and move to the upside. In this way, you can look for trades almost every day. All you have to do is to mark the liquidity highs and lows and take the entries after the sweep of liquidity. And if you want to learn this in the deep, you can join our personal classes. The link of our Telegram is in description. Thanks for watching this video.